Good morning, good afternoon, good evening, folks. Michael Zuber, one rental at a time, back with my good friend, Mr. Dan Bird. How you doing, sir?
Good morning. I'm doing well. 1 week till Christmas. Can you believe it?
1 week, yeah, 1 week till Christmas. Crazy. Can't believe it. Year's almost over. But damn, we had a very busy week last week. We had CPI on Tuesday, Fed decision Wednesday, retail sales Thursday. Where do you want to start?
Well, let's start with let's start with the view of what you just talked about, all of those things,
Okay.
and what happened with the market as a result
Yeah,
of that.
sounds good.
I'm going to share this, and this is from Stock Traders Almanac.
Hmm.
So they do extensive research, historical research on the market,
Right.
and these lines and comments here are ones that I drew in. So I drew these in because the background chart is actually by trading day
Oh, okay.
at the bottom, trading day 1 through 21. So there's 21 trading days in December, but you
Okay.
can't really figure out what weeks those are in or what the actual days are unless
Mm,
I actually put them in.
okay.
So this is just what you just said. This is last week: CPI, Fed rate hike, options expiration, retail sales,
Right.
all of those things. And last week when we talked, I said it was going to be a very busy week,
Yeah.
and we had the potential to go down before we went up,
Yep. Okay.
which is what happened.
Yeah, it certainly went down. I mean, if I were to kind of break them down, CPI came in below expectations. The downtrend, at least in headline, is intact.
Actually
Although,
accelerating. Actually
yeah,
accelerating.
accelerating is fair. Although core is not. Core is still flat at 6%. It pretty interesting. I went back and looked. In June, when headline posted 9.1, headline was 6, or core was 6, sorry.
Right.
Now, fast forward, whatever that is, 5 months, headlines now 7.1,
Mm-hmm.
but core is 6.
Yeah, that's right.
There's
That's okay.
yeah, there's
Headline
there
headline will drag core down with it eventually.
it's going slow. Again, I think a lot of people are enamored with headline. But as I've been pointing out for 3 or 4 months, the magic's in core. But we'll get core PCE on Friday. So that's the most important number, core
Yeah,
PCE.
that's the one that the Fed really looks at.
Correct.
I actually have a chart that we could talk about that. But before I do that, let me show my newsletter for
Oh, yeah,
anybody
please.
that's interested. If anybody wants to, I do this for my own purposes every Saturday,
Hmm.
just to kind of do research, and started sharing it with friends and family, and then folks in your channel,
Hmm.
sharing it with them if anybody would be interested. There's no charge for it.
Hmm.
So it's just kind of a consolidation of all the research I do on Saturday for the upcoming week. And if you'd like it, just send me an email to breakpointtrading@gmail.com, and I'll add you to the list.
Yep.
There's a couple of,
It's
some cartoons I put in there.
Yeah, it's something I look forward to getting each Saturday. I usually read Sunday morning while I enjoy my coffee. And yeah, the amount of work you put in this and the consistency is appreciated. And the fact that you give it away for free at breakpointtrading@gmail.com is awesome. So yeah, send him a note, get last week's, get next week's. And if you don't want it anymore, send him a note. He'll take you off. It's that simple.
Not a problem at all. We'll talk about this little chart down here in a second.
Okay.
But my conclusions from my research for this coming week.
Mm-hmm.
So last week's selling was in keeping with Max Payne. We're going to talk about Max Payne in the next session.
Yeah.
Today.
Okay.
And I'll explain what that is and what it looks like. I think there might be more selling on Monday because Max Payne a lot of times will carry over the beginning of the week after options
Sure.
expiration.
Yep.
And then the Santa rally, like the chart I just showed, is probably historically will start on Tuesday, but that doesn't mean it will.
Right.
I mean, there's no
Okay.
guarantee. There's no guarantee that Santa will ever even show up. I mean, Santa
Yeah.
might be passed out like this cartoon up here, meeting
Yeah.
too
He's
much
had a
people.
few beers and some pizza. He's snoozing.
Yeah, he might not even show. So,
That's funny.
but historically, Tuesday is when it starts. It's usually the week before Christmas, and
Right.
Tuesday, Monday, I think we're going to get more selling. We'll talk about that in a minute.
Yeah.
So my conclusion is caution is advised. If the market does rally next week before Christmas, it should continue into the first 2 weeks of January. Better than expected CPI was incentive to add some long positions, but these were quickly stopped out That's
Yeah.
what happened. That's what happened to me. So I said last week, I don't know if you remember, but I said the inflation numbers want to come down, which should be
Yes.
a catalyst for the market to go up. But the
Yes.
market, everything I'm seeing in the charts on the market, it wants to go down.
Hmm.
And we got a nice bounce right in the beginning of the morning after the CPI
Yeah.
number. And then
Yeah.
it
That first.
sold off the
Yeah.
rest of the day and sold off
Yeah.
the
That
rest of the week.
that first 30 minutes, as you've reminded us many, many times, is not where the big boys play. They let the
Right.
novice investors jump in and get cooked.
Right. Yep. That's
Yeah.
amateur hour.
Amateur hour. That I was seeking for the word, but I forgot. Yeah. Amateur hour. Yeah. Don't do that.
So
Yeah.
my advice, be sure to have stops in place to protect your portfolio.
Yeah. Very, very cool. Well, I actually want to go back and talk about the Fed. Because again, we talked about CPI coming in light. We talked about PCE on Friday being the big number. So if I were to kind of summarize the Fed, the dot plots is what it was all about because the 50 was a layup. They're now saying 5.1 is a terminal rate. I do not think they get there. I think it's all talking tough.
I don't think
Uh,
they'll get there. I've been saying that all along. I think they might get to 5, but I don't think they'll get anything above 5.
yeah, so five's the number. I haven't changed my opinion. I think we get a quarter February 1st and a quarter in March, which will bring us to 4.75 to 5. That's the range. So I think we're almost done. I think we've got half a point left. I think they come in little quarter increments. And then we see what happens from there. What do you think?
No, I've been saying that all along. I've said, pretty much almost all year that they'd be done by December. Now they're still going to have probably another rate hike in February,
Oh, for
and
sure.
and probably another one in April. But those will be small ones,
Yeah, they'll be tiny,
quarter
but
points.
then they'll be done.
Right. They'll get close to 5, but what's already happening and what happened last week with a good inflation number. I mean, I think it's clear everybody pretty much expects that inflation is coming down now.
Yeah, we've seen
And
the
this chart right
PCE
here
come
is
down.
actually core. This is the core CPI chart.
Okay.
So you can see core, this is a monthly. So the number only comes out once a month. So
Mhm.
there's a monthly number, but down below is the rate of change. The first one is the 12-month rate of change. And you can see it's sort of flattened out, and it's
It's
still
stubborn
kind
at
of,
6%.
yeah, it's still kind of flat, hovering right there at 6%, all the way back
Yep.
from the beginning of the year. Pretty much a little above 6 and back to 6, above 6 and back to 6.
Yep.
But look at the 1-month rate of change.
Hmm.
The one above that is the 12-month, which is
Yeah.
what these numbers up here are for. These are
Yeah.
monthly, right?
The 12-month is easy to understand. Tell me. So the 1 month. Okay.
The 1-month is implying, and just it's basically what I just said. The headline number is going to drag core lower. And that's kind of what you're seeing right here.
Okay.
So the 1-month rate of change is declining, even though the 12-month is kind of going sideways.
Okay.
And you could make an argument that the 1-month is kind of going sideways as well. Even though the highs, they're lower highs,
Mhm.
but they're really not higher lows.
Yeah, we haven't
lower
broken
lows,
the.
not really lower lows yet either,
Yeah.
until this gets down to 0.
Yeah. Okay.
But it looks like it's starting to trend lower.
Yeah.
So
See, I don't see core making a meaningful move lower until March or April, just
yeah,
given how the data that makes up core.
right. That could very well be. Now, if you go back, this is November. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, right back here.
Mm-hmm.
You see, there were very small increases before that,
Right.
even though we had big increases in CPI.
Yeah. This is the base effect rolling off. Yep.
That's right. So that forces, you can see that the base effect right here,
Moderates.
the big jumps in core right here.
Yeah, that's
But
something I'm counting on. I'm counting on the base
yeah,
effect.
but then we've got some big jumps in core that are going to roll off.
Agreed.
So core will and it should be flattening out. That's what it's doing. It's flattening out. But it's going to, we're going to have lower numbers up here that will roll off bigger.
Yeah, this is part of the reason why I think we've got
the rate of change numbers.
this is why we have, I think, 3 or 4 more months of sticky core, and then these roll off and you get smaller increments. That's kind of
Right.
one of, yeah. Okay.
Yeah. Yeah. I don't disagree with that.
Okay. And then we got
But
retail sales. Is something I talked about on my daily show heading into the week was retail sales was going to be a sleeper. And it
right.
actually came in negative 0.6 on an expectation of negative 0.3.
Yeah.
And
Actually, you go to my, yeah, this is the numbers for last week.
oh
So
yeah,
retail sales is down here at the bottom.
yep. Oh, negative
Expectation
one.
was negative 0.1 and it was negative 0.6.
Yeah, retail sales I think was the uh-oh. Because what I really had, what I think happened last week, if I were to put it in a nutshell, is we are no longer worried about inflation. We are worried about a recession. That's it.
Yeah. That's what I've said from the beginning of the year.
But
By the end
but
of
what,
by the
again, what I'm
by the
trying to
end,
say is it happened last week for the mass.
yeah,
You were
no, I
ahead of
agree.
it. You were
I
ahead.
agree.
Yeah,
I agree because that CPI number was really good that the market should have taken off. But
right.
you're right, the market is no longer worried about inflation, and even
Nope.
you can even see that. You can even see that in bonds. I mean, the
Exactly. Bonds went
10 year,
down for the week.
right? The 10 year is still flat. It's still down.
It's stuck at 3.5.
Right. So bonds, the bond market isn't worried about inflation anymore.
Nope. Inflation is now not a problem. It's all about a recession. And I think that happened last week. And
Right.
now that becomes the go forward thing. So, well, it'll be interesting because,
That's
again, recession talks can be self-fulfilling prophecies, right?
Yeah, and that's going to be the narrative, and that's what's going to prevent the Fed from going above 5, and that's what's going to
Exactly.
allow the Fed to start cutting, even though they
Oh,
want
no,
to.
no, no, no,
Yeah,
no,
yeah,
no,
they will
no.
they will start cutting. Yes, mark my
Well, okay.
words.
Okay.
Mark
Hold
my
on.
words.
They will eventually cut. So that's, I do
It'll
not
be
think they cut next year.
it'll be by summer they'll be cutting.
Dude, you and freaking Jeremy, what's his name? No, yeah, Jeremy Siegel. You guys are talking about a cut by summer. All right.
Yeah,
I'm going to put $1 down somewhere. So
you're gonna
again,
start.
summer meaning end of Q2, meaning June, or do you want all the way to August?
Well, I think they're going to have 2 quarter point rate hikes.
So that's April,
So that's
March, March.
February
So okay,
1st,
and March 16th.
March 16th. Those will be two of those. Those will be quarter point hikes.
We agree on that. Then
The
a
one in
pause.
March, the one in March will be a reluctant hike, I predict.
Okay,
And
still a
the
hike, but sure.
and the,
Okay.
and the narrative will start to become much more dovish.
Oh, for
Okay,
sure. Oh,
we're gonna hike.
yeah.
We're gonna hike, and we're gonna keep it here
Yeah. We think
for as
we're
long as
significantly restrictive. We got to let
right.
the
All the
delay,
numbers
blah,
are
blah,
coming
blah.
down. We've done our job. In fact, we could get low 6 CPI number next month.
Low 6
Low 6. It went
headlines.
it went from 7.7 to 7.1.
Yeah.
So
Okay.
that's 0.6 right there.
Sure. Yeah. Yeah.
We could get something below 6.5.
Uh,
Here are the
I don't think so.
commodities. So this in between these two blue lines is
Maybe.
November.
Maybe.
That's what CPI was based on. This last
Yeah.
one, the 7.1 number was based on this decline.
Yes.
And you can see where we are now.
Yeah. Maybe. Maybe. Yeah, it'll certainly be in the sixes. We'll have I mean, just random ass guess. I haven't thought about it. I'm thinking like 6.6, 6.7.
I say below 6.5.
Okay. I like it. I haven't even thought about it yet. That I like it. Calling that on December
All right,
18th.
so that's February 1st.
It is February. No,
I mean
that's
yeah.
the Fed. That's no.
That's the rate. I'm sorry. Yeah, you're right. That's
Yeah,
what is the date?
It probably comes out like
January.
21st, 22nd, somewhere around there.
Yeah, something like that. Yeah, the January number, the CPI number, right?
Yeah, the December number.
I think it will be below 6.5.
Okay, I mean, I love calls like that. Yeah,
that's not a big leap, by the way.
No,
it went from 7.7 to 7.1. That's 0.6. If you take 0.6 off of 7.1, you're at 6.5 right there.
Yeah, but you're assuming as the number gets smaller, the decrease is the same, and that's mathematically tough to do.
Yeah,
So
we'll
maybe,
see.
yeah, we'll see.
I
I like
think
it.
I think I think inflation is going to start dropping off a cliff.
Well, again, I go back to retail sales. Retail sales that surprised -6 in the holiday season. I think that was a oh shit moment. I
Yeah,
think that was a
so
big deal.
I meant to put this chart up, but I didn't do it. But let's see. I think I have it here. Gallery views. Here's retail sales. Here's a side by side. The consumer discretionary with retail.
All right, what's it telling me?
There's the daily. So the one on the left is consumer discretionary. Here's the weekly.
So that's the category. Okay.
Yeah. And the one on the right is retail. It's the ETF for retail.
Oh, these are ETF. Got it. Okay.
Yeah. So you can see consumer discretionary, which is things that people want to buy.
Mm-hmm.
But as we go into a recession, they'll pull back on that.
Yeah, that'll be the first thing they pull back on. Yep. Mm-hmm.
Yeah, and one of the biggest stocks in that category is Tesla.
Yeah. Yeah.
I'm gonna,
Trading at 150.
yeah, I'm going to show you something on Tesla in the next session that we do.
Nice.
But there's consumer discretionary already now below its 200 week. This is a weekly chart. It's 200 week
Woo. Wow.
moving average.
That's not
And
good.
here's retail sales. You can see last week. This is a weekly chart. So here's last week, that big red one.
Yep.
And that dropped right down to the 200 week and will likely drop through it on big volume.
Yeah.
So yes, that's implying recession. People are pulling back. They're not spending as much. All the things the Fed wanted.
Yeah, no, they're getting it.
Yeah.
Yeah, it's going to be really interesting because I think when you talk about a recession, and obviously we're talking about stocks here.
I'll go to this cartoon from my newsletter.
Look at that. Oh, good old pal, just hitting the economy with a stick. Yeah.
Blindfolded.
Yeah, blindfolded. Good point. And probably dizzy. Yeah. The question is going to be earnings.
Yeah.
Right. We had multiple compression, which was step one of a bear market. I don't think we've had meaningful earnings compression or revisions or whatever, cuts, whatever you want to call that. I think that starts in earnest in January.
Yeah, I don't disagree with that. I think that's a natural progression.
Yeah. And then the other thing that let's talk about you and I's career in software. I believe the next year to 18 months in software, specifically software SaaS, all software really is going to be, I would hate to be a sales rep or a sales manager. New logo acquisition down, logo churn up, seat additions down. People are going to be negotiating maintenance agreements. Oh, it's going to be so yucky. Ugh, the next year, 18 months in software is going to suck as a software sales rep, in my opinion.
It depends on which company you're working for. I think some will actually do well.
Okay, sure.
Others will not do well.
I think there's going to be a lot of software SaaS companies that were always priced on revenue or growth that end up getting bought by private equity, and then they're going to slash their head count and turn them into cash cows.
Yeah, I agree with that. I think there'll be a lot of consolidation going on.
Yeah, there'll be this is so much like the. Ugh. Yeah, I would not want to be a sales leader in this environment. It's going to be tough.
Yeah, this is a completely off topic, and we won't spend any time on it. But there's a new technology that just came out called Chat GPT.
I've heard about it. Yeah.
Yeah, that's pretty amazing.
Yeah, it's getting better. It's getting pretty cool.
It could actually overtake Google. It could replace Google.
Could. Yeah.
In fact.
Yeah, I've heard that. Yeah, I haven't done any research on it, but yeah.
Yeah, I saw an article.
We'll save that for another day.
That's a whole nother conversation. But I read an article by a guy that tested both Google and Chat GPT. And he said that some of them, each one does a really good job for what they're designed for.
At what they do, yeah.
Right.
Yeah. So last thing, if we talk about next week, it really is kind of Monday, what I'm hearing you saying, maybe some follow-through selling. And then there's hope, or at least historical trend, that Santa might show up on Tuesday, Wednesday.
Well, tradition, historically that's been the case.
Yeah, just
Yes.
historically. We're not calling that. Who knows, right? Santa could be
Yeah. Who
sleeping.
knows? And
But
here's what happened last week, and here's where we are.
oh, you filled in the gap like you said we would.
We filled the gap. Yeah, I predicted that.
Yeah, you did.
Well,
Go back and watch the playlist.
I didn't really predict it. I just said it's high probability.
Likely. Yeah.
High probability that'll happen. And the reason is, and I actually sent a note to Tom Bowley. Tom Bowley, the guy that has been saying that
bottom, I think, or
saying the bottom was in June. It wasn't in June. It was in October, maybe. But he's still very bullish. And even back here, he was saying, I'm still bullish. I'm buying leveraged ETFs.
Oh, wow.
On the Qs.
On the upside.
On the upside.
Ooh.
And I'm sticking with that because I believe the market has turned. Well, he keeps very tight stops, and that's the thing. You can't follow these people, including me. You can't follow what they do. You can't say, "Oh, he did that, so I'm going to do that," because you don't know when he's getting out.
Yeah, they don't have the stops. Yeah,
I mean, you could be getting in the same time he's getting out.
Yeah.
So you don't know what his stops are. I'm sure he's already stopped out.
Oh, I'm sure. Yeah.
But what I did was I sent him this chart, and I said, Tom, this is what everybody else in the world is looking at. This is what everyone is seeing. They're seeing 3 times the market hit this. It's almost perfect too.
Yeah, it is.
The market hit this downtrend line, and now the downtrend line is right around the 200-day moving average. It hit it again right here, and yeah, we came back up, but as soon as we hit that again, it just crashed down.
Yeah.
This is what everybody's seeing. That's why technical analysis works, because everybody's looking at the same thing.
Yeah.
So of course we went down.
Yeah.
And that's why I said it was a high probability that we're going to fill this gap, which is exactly what we did. And we now close below the 50-day, which is not a good thing.
Nope.
I think we have a high probability that Monday there'll be more selling. And we'll go down and hit this 50% Fibonacci level right here, which is at 3,800.
Okay.
And then we have to watch what happens. Because that's Monday. Remember, Tuesday historically is when the Santa rally starts. So if we go down and hit that 50% Fibonacci level, remember, everybody else is looking at the exact same level. This isn't just me looking at this. Everyone's looking at that.
Right.
So we hit 3,800, then we could very likely, for the next 3 weeks, have a really nice rally.
Okay.
If we don't, then big trouble.
Got it.
Big trouble. 37.25 is the next Fibonacci level, and then it's all the way back down to 3,500 again, and then it's down to 3,200.
So, fun times. Oh, Santa, show up, buddy.
Come on, Santa.
Need help. Come on.
Get off that pizza. Get off the pizza now.
Yes.
The VIX, interestingly, didn't really do much last week.
No, it didn't. I watched it.
Even with all the selling. I mean, the VIX, it's got a little bit of red there, and it's hanging right around that line. It could easily go either way.
Yeah.
But it didn't really move a lot, even though the market, the S&P did.
I wonder if that's just because retail's out. I don't know.
No, I don't. The VIX isn't retail. The VIX is based on options.
No, yeah, I understand. Yeah.
So it's the volatility of options. If options are very volatile, that usually means selling.
Right.
And if the volatile dissipates, that means that traders are either just sitting on their hands and not doing anything, or they're buying.
The put calls telling you people are generally negative.
Put call ratio has been, it looks like a heart monitor.
It does.
I mean, you can go way back, and I've never really seen it do something like this. It's like the options traders are trying to go short, and then the market goes up, and they have to get back out. They keep trying to go short. That's what these spikes. When it spikes up, that means they're buying puts.
Got it.
They keep trying to go short, but then the market goes up. So now it's going
back up. Could they be
up.
buying shorts to protect their longs?
Yeah. Oh, yeah. Absolutely.
Yeah. Okay.
Absolutely. They could be buying them for insurance. No question.
Right.
Yeah. A lot of the big ones, that's what they do.
Okay.
But here's the 10-year treasury that we talked about before. Look at that. That's
Flat
kind of
line.
flat. That's flat line.
3.5, baby.
It's right at 3.5.
Yeah.
So, I mean, a lot of these things, if we get that Santa rally, this is probably going to break down through here.
Yeah.
That'll head lower.
Okay.
The VIX will head lower. So this will turn back green again.
Mm-hmm.
And the market should take off. But there's no guarantee that's going to happen.
Yeah, of course. No, these are just,
no guarantee.
No guarantee.
This is my chart with these levels in here. If we get to 3,800, then we've hit the 3x level, which is very rare.
Okay.
So that could happen Monday, but I don't think it's going to stay there. If it does, it won't stay there very long.
Okay.
This is the reversion to the mean chart, basically,
mm-hmm.
which is that dotted blue line right there in the middle. So when it gets too far away from that, it's going to go back to it. That's at 39.50.
Got it.
So that might be where it wants to get back to.
Okay.
And then this is a weekly chart that shows the Fibonacci levels from the high to basically the low is the COVID crash.
Okay.
So we are sitting right on the 61.8 level right there.
Mm-hmm.
And then the pink ones are the quads. So it's divides this whole thing into perfect quadrants.
Okay.
And the 50% level is right down here at just below 3,800.
Got it. Okay.
So again, I think we could get selling Monday, but there's a good chance it's going to bounce and start going back up, and we'll get a little rally. And if it doesn't, then we're in big trouble.
Got it.
And then this is the NASDAQ 100. Notice the volume here on Friday.
Ooh.
That's quadruple witching.
Right.
So you have to kind of take that into account when you see volume like that and say, oh, look at that. The market went down on huge volume. Well, that's where all options were expiring. So you always have big volume days when that happens.
Yeah.
So we'll see. But what worries me is that these momentum indicators have not completed their downtrends.
Mm.
So that's why I think there's still a little bit more selling left to go.
Okay.
Before that happens. And let's see, what do we have next week? Not too much. Building a lot of real estate stuff next week.
Yeah, actually on my channel, existing home sales is the big number of the week. 4.2 is the expectation or forecast. My guess is 4.08. We're going to do 4.08.
Okay.
For existing.
So
homes.
weaker.
Yep.
That'll be good. The Fed will like to see that.
Yeah, for sure.
Building permits are declining.
Yeah. Yeah, not good.
Yeah.
And then
GDP.
PCE Friday.
PCE, yeah, that'll be a big one too. GDP is just a revision.
Yeah, it's the third and final revision for Q3.
Right.
Yeah.
Right.
Yep.
And cool. What else we got here? We talked about that. Here's I put this in the newsletter. This was interesting. I went back and looked at 2018 because 2018 was when we had a big sell-off in December.
Yeah.
And I was just curious of when the Santa rally started in 2018. It started on the day after Christmas.
Interesting.
12/26. So this red line is where we are right now.
Oh, interesting.
Notice that options expiration in 2018 was a week later. It was a week later just because of how the calendar fell.
Right.
So it was a week later than it was this year. But the market went down, and then went down one more day after options Friday.
Right.
And then on that next Tuesday, it started, the rally started.
Got it.
So that's the Tuesday after options expiration. And this is what our current one looks like. So here's options expiration right here.
So that's why you're calling it one more Monday to settle out. And then
one more Monday, maybe to 3,800. And then Tuesday, the rally might start.
It will be fun looking at this next week.
Yes, absolutely. This is the retail. I knew I had the retail one somewhere.
Yeah, you did.
Yes, this is the one we just talked about. It's actually in the newsletter. So
very cool.
Well, let's talk about this real quick.
Okay.
Before we go to the next session, because this was a chart that I had in my newsletter, and I talked a lot about it. This is actually from one of your listeners that sent me a note and said,
Oh, wow.
when will you decide that we're no longer in a short-term bear market, but it's now become a long-term bear market?
I like that question.
What would you be looking for to determine that? Which I thought was a really good question.
Okay.
So I went back and, it goes back to this here, secular bulls versus secular bears, right? This is all the way back to 1929. The red ones are secular bears, which means long-term bears. And in between them are long-term bulls, which are secular bulls, right?
Yep.
So I took that timing and I found this chart here that showed all the bear markets back to 1956.
Okay.
And I ranked them based on this, of which ones of these were in secular bulls and secular bears.
I got you.
All right. So the green is cyclical bear markets inside of secular bulls. And the red are secular bears, which means this was a long-term bear.
Okay.
So the question was, when will you decide that this is going to be a long-term bear instead of just a cyclical bear? So the first thing that should jump out at you in this is the height and the depth of the secular bears.
Yeah.
Right? The height and the depth of the red ones versus the green ones. It shows the blue one is the number of months. So it's the number of months from a high to the low for the bear market.
Yeah.
The one we're in right now is 10 months from the high to the low.
Okay.
You might say, well, we've been in a bear market for 12 months, almost 12 months.
Okay.
From January to December, but the low was in October.
Right.
So if we don't make a new low, then we start counting this orange one.
Oh, okay.
That's the length of recovery. We don't know that yet. So this is the COVID crash right here. Just 1 month, only a 1 month bear market, 5 months to recover, but it went down almost 34%. So right now we're down 38%. That's actually more than any of the other cyclical bears, right? But it's only been 10 months. So we don't know yet if this is going to be a secular bear. It's still in the cyclical bear category, and it's still inside of a secular bull.
And that 10 months changes if we get a new low.
We get a new low, this 10 months will then change. If we get a new low in January or February, let's say, then this will be 14 months.
Got it. That makes sense. Okay.
And then this will be whatever that new low is. It'll be
right.
43 or something.
Okay. I like it.
All right. And then how do we know then that we've transitioned from a secular bull to a secular bear? So these are the three indicators that I'm looking at. This is a monthly chart. The top two are momentum indicators, the RSI, relative strength index, and the price performance oscillator, or price percentage oscillator. You can see when we came out of the secular bear markets, RSI triggers first, and then the PPO triggers, and then the price actually goes above the previous high.
Oh, I gotcha.
So you can mark the current secular bull either from the low back in 2009 when it started, or you can mark it, which most, technically is where you should mark it, is when it actually breaks above the previous high.
Got it.
Which is 2013. Secular bulls usually run for 18 to 20 years. So we've got till roughly around 2030 if this really is a secular bull market.
Okay.
But these are the things that we're going to watch, and we'll come back to this, occasionally, periodically. So the RSI has not broken below this pink line. It's the 40 line, still above it. The PPO is still well above zero. It's got a long way to go still. And this red line is the 200-week moving average, which all the way back here, when it broke above it way back here, and then technically when the new bull market started, it was well above it. As long as it stays above that red line, then we're okay. Now it dropped below it, but it didn't close below it back here in COVID.
Oh, I gotcha. Okay.
All right. So we almost went below right here. This is the October low, but if you remember what happened when we hit that 34.91 number,
Yeah.
the market just took off.
Yep.
And didn't look back. I mean, it basically hit this line and just went right back up again. So those are the three things that I'm looking for to determine if we are no longer in a secular bull market.
I like it. We will come back and check this out every once in a while. Show your newsletter website one more time, or
Sure.
email. Sorry.
Breakpointtrading@gmail.com. Just send me an email and I'll add you to the list. And in the next session, we're going to talk about max pain.
Max pain.
Talk about options expiration, which happened on Friday, and what max pain means. And I'll show you some things about some of the platforms that I use, some shortcuts, give people some ideas on if they're using stock charts or if they're using VectorVest, some ways that they can get more out of it.
Awesome. Thank you so much.